Yo, what's happening? So I'm going to share with you something I was actually trying to share last week, but something happened with the technology. Video is gone. Turns out I saved it in a spot I didn't realize I saved that. So now I'm going to just give you the rundown right now because there's really not been a lot of crazy news come out. Hopefully you had an enjoyable day yesterday. If you did have the day off, I was traveling, spending time with family. But let's go back to January 8th. That's been the big push for people to see what's happening with the rates. Hey, rates are going to go down. We've got this push for the GSEs, Fannie Mae, Freddie Mac, to invest into mortgage-backed securities. So let's go back and I'm share with you a conversation I was having with my team on that day. I think I'd even shared a little bit of this before. So January 8th at 2:56 p.m. Mountain Time, this is what the time that was at, that was posted. I saw, actually, it's probably 2:56. It changes stuff depending upon where I'm at. I think it's probably 2:56 Central, which is where I'm at presently. So that's where this chat started. You can see that right there. I'm sharing with that. I'm sharing a little bit better view because that view got cut. We were below this peak line, right? And I shaded this. If you haven't been watching this, for some reason this is your first time, I really point these ranges out. This bottom range reflects the value of the Fannie or the UMBS, Universal Mortgage-Backed Security 5.5 coupon, the day they announced quantitative easing back in 2008. This was the start of that day's pricing. It stopped trading up here. Now you can see how much move that was because each one of these candles represents a day's trading. See how much trading we have in a day compared to this full range? That was a lot of trading everybody did based upon the fact that they were doing quantitative easing. A lot of movement happened. It was announced by the Fed chairman, which was Ben Bernanke, and the Treasury Secretary, Hank Paulson, said we're going to collectively do this purchasing of securities to help stimulate the economy. Everybody jumped in before they started doing that. Now, that was the 8th later in the day. I was saying, hey, it's still staying pretty well below that ceiling. It's hitting the ceiling, but it's not going to get above it. And I even showed this one. It's like, hey, right there towards the end of the day, it's actually looking to try and it's banging on the top. It's just not going to make it. It's positive. It's in positive territory, very slightly positive territory for the open, but it's just banging on the top of that ceiling. It's not going to get there. I even put in there, that was a comment. It's trying, but it ain't going to get there. Then at the end of the day, 4:51 p.m. Central, look what happened. It jumped at the close and punched right through. Like, what in the crap happened? How did that move that needle? I wasn't certain until I did some research. Bam, there it was. Right there. Trump instructs representatives to buy $200 billion of mortgage-backed securities. Now, what is that Trump representation? What is that $200 billion. Now, it happened right at the end of the day. I'm going to actually show you that CNBC article, which really is kind of very interesting because I was saying right at the end of the day, this came out, right? That information just hit and it affected the mortgage-backed securities. Well, here it is right there. It was published right at the end of the day, 4:37 p.m. Eastern time. Came out, bam, which was right before all this hit and then it started to make movement. So what does that mean for us, though? Well, it should mean we're going to see interest rates going down, right? Because if we're going to do quantitative easing, we're going to use all these billions of dollars to invest into mortgage-backed securities. We should see all this massive amount of movement. But did it work that way? Well, let's take a peek. Because a lot of people are asking me right now, I heard the rates are down. Rates are down. Should I be floating? Should I wait before I go into contract? I'm going to tell you why you go into contract now. Because they're telegraphing this, that this is going to happen. We're going to get a new Fed chairman. We know darn well that the current administration is pushing for quantitative easing. He's saying, hey, Fannie and Freddie, you have $200 billion in reserves. Put that over here, excess reserves. Put it here. Buy down the rates. We need to stimulate. Well, how are we doing with our supply of houses? Are we oversupply or undersupply? If you look at 2008, we were oversupply for the demand. Right now, we're undersupply for the demand. If you push rates down, what's going to happen to the price? Right? Well, we'll talk about that here in a minute. Now, let's look at the mortgage-backed securities as they sit right now. Here's where we're at. So this was the 8th, which we just looked at, right? This was the 8th, punched up. The very next day, it opened up low, gap down open, punched way up, and then it receded back. Then the following day, what did we get? Went back down inside this sideways channel, and it tried to hit it again on the 14th. Couldn't get it. It couldn't stay above it long. 15th, 16th, and today, the 20th. We're just getting hammered. Now, some will say well, we might see, well, here's the chance. Here's the thing. If we don't have any sort of definitive plan as to when they're going to distribute this capital, we don't know when they're going to. We know they're going to. We got the head of the FHFA, who oversees Fannie and Freddie, Pulte. He has yet to say that I'm aware of. I haven't heard it, at least, how they're going to distribute this capital and how they're going to purchase into the bonds. When they start doing that, we might see it go up above this and get in here. It's possible. It's going to take a lot of that rhetoric to get it to where it's going to punch in here. That's just going to be, I believe, where all the capital will come for external capital. Anything to get above here, that's going to require capital from actual large. It could be Fannie Freddie. It could be coming from the Fed. Any of those places to get above this particular range to get back to where we were in these really, really low rates. What does that mean for you? They're telegraphing they want to do this. If that's the case, if interest rates go down, we have heard if rates go down 1%, we could see price of housing go up 10 to 12%. So let's say they punch up 12%. You might say, hey, I'm going to wait till rates go down. If rates are your thing, you should buy anyway right now. Why? Let's say you bought a $200,000 house. You put 20% down, $40,000, right? Let's say you got $5,000 in cost today because it's really not as expensive, $5,000, $6,000, something like that. But I mean, you still have taxes, the insurance. You take that out, it's probably closer to $5,000 in costs. Now, let's talk about what happens to the value of that home if rates drop by 1%. A $200,000 property will jump by $24,000. That right there is 12% of 200,000. Pretty significant. What can you do then? You could use the equity you just built to refinance if you are hell-bent on having the lower interest rate. If that's your thing. I personally think it's a waste. We can talk about it personally if you want, but let's say you want that. So you use $5,000 to refinance to get the lower interest rate that's out there. You had $24,000 in value. You have $19,000 in still value that was there. That $19,000 gets you what? What is that? That $19,000 is equivalent when you take your 20% down, which was $40,000, and you take your $5,000 you paid in costs. Of that, you're still at 42%. You still have a 42% increase on your money, the money you invested, because the total value of the property went up by 12. What you kept was still 42% of what your initial investment is, because we took off the top the 24,000. It's not of your total investment because of the 5,000 you reinvested. You took that off the top of your 24,000 to the 19,000, and then you used that was left over to apply it towards the original investment. You are now 42% increase. Now you can rework those numbers all you want. Doesn't change the fact that the equity in the home, because of the price increase from the drop in rates, gave you the capital to get the lower rate because you have this thing about rates, and you still have more equity left. Which is smarter? Wait for the price to go up to get the lower interest rate, or get a lower price and let the increase on the house pay for this refi you absolutely have to have. And I will say that that's a waste of your capital. Keep it as it is. Use and go buy more houses. Don't waste your time on refis, but we'll talk about it. And if you're hell-bent on the refi, we'll help you out. But I will give you reasons why you should. That's today's discussion, 20th of January, 2026. If you have questions about this, want to know more about that, let's talk about it. Get me on the phone. info@aaronchapman.com. Let's talk, set up a conversation. I'd be more than happy to chat with you. Oh, and I don't have one with me, but Red Economics. We got to go to quitjerkingoff.com. Let's just do that real quick here. I'm going to do a quick share screen so we can go there. We can look at it, get familiar with it, know that it's out there. We're going to do this real quick, which is going to be, actually, that's not the right screen. Have this cut. Stop that share. All right, so I'm going to go to quit jerking off. There we go. Get your copy right now. Mr. Robert G. Allen. In fact, you go listen to the audio book now. You got Robert Allen doing his audio for the forward. You've got Dolph DeRoos doing the audio for the afterward, and myself in the middle. Go get the audio book. And I'd love you to go to Amazon and give me a referral. These are some heavy hitters out there in the marketplace right now. In fact, I've got a live podcast right now with Lee Brown. I got another live one right now with Gary Pinkerton. Great people. You want to listen to what they've got going on? Several podcasts. You want to look it up, go to Spotify and just put my name in. But we're talking about Red Economics, giving the background on it, talking to the artist, which is my brother. But check this out. Definitely go there. Let's go to your Amazon. Why not? Let's go to Amazon real quick. And let's look it up. See if we even have any reviews at this point. I haven't looked for a couple of days. Oh, see here. We got the hardcover. We got the audiobook kicking out. Kindle. This is coming. Look at that. $1.99. Get after that. We're going to push for that thing. Let's actually click on it and see what we got. We've got some reviews, guys. 5 stars. Awesome. Thank you. Whoever did that, you kick ass. Let's take a look at those. I'm curious. Awesome. Wow. Okay. Thank you. Thank you. Thank you. Thank you. Those who read it and took the time to type this up, I sincerely appreciate it. We're going to do something for those who are actually putting these in. We're going to do a big push in the next couple of days for those to go get at least get the ebook. And for those who do a review, we're going to pull from those 5 stars. I'm going to tell you what you're going to get. Only 88 people are going to get it. So you got a good shot at getting it. 88 people have a shot at this, and it's going to be for me. It's going to be what I think it'd be badass to be able to give out. So appreciate you guys. I will talk to you. I'm actually going to come back here on the 22nd. I'm not going to wait till Friday. Appreciate you.